A man named Robert had just sold his house on a Friday. He split the money between two accounts. He wired part of it to help his daughter. He paid off a credit card. And he moved the rest into a safer account that a phone call told him to use. None of it was illegal. But by the time tax season came around, Robert could not cleanly explain a single piece of it. The paperwork from the sale was buried in a drawer. The wire confirmations were gone. His tax preparer had questions he could not answer. And one of those transfers, the one to the safer account, turned out to be a scam. Here is the hard part. Every single mistake Robert made was avoidable. If you have just sold a home, received an inheritance, or come into a large, legitimate sum of money. This video is the calm, step-by-step plan he wishes he had used. 6 simple steps so that the biggest deposit of your life does not become the most painful. First, a few honest ground rules. I'm not an advisor, an agent, an attorney, or an accountant. This is educational. It is not personalized financial, tax, legal, or banking advice. And large money events almost always have a tax side, a home sale, an inheritance, a legal settlement. So one of the smartest things you can do is talk to a qualified tax professional. This video does not replace them. It does the opposite. It helps you walk into their office already organized, instead of showing up in a panic next April with a shoebox full of mystery. This is also not a video about hiding money, avoiding reports, or splitting deposits so they look smaller. Please do not do that. We are doing the exact opposite. The entire goal is to keep your money easy to explain to your bank, to your tax preparer, to your family, and to your future self. So here's the plan. 6 steps, 6 words. Keep them in your head for the rest of this video. Pause. Park. Prove. Plan. Protect. Preserve. Pause because the money does not need to move today. Park because while you prepare, it should sit somewhere safe and insured. Prove because you want to document where it came from while the paperwork is still in your hands. Plan because you decide where it is really going, how it gets there, and when. Protect because people who just received a large sum are exactly who scammers go looking for. And preserve because one clean record today saves you a stressful tax season later. Let us walk through them, one at a time. Step 1 is the hardest because it asks you to do almost nothing for a little while. A large, legitimate sum of money almost never needs to move the day it lands. But that is exactly when the pressure shows up. The number feels too big to just sit there. A relative has a suggestion. A salesperson has an opportunity that is only good this week. A caller has an urgent warning. And the rushed move is almost always the one that creates the problem. The wire sent before the paperwork is ready. The transfer to the wrong account. The deadline invented by a stranger who wanted you to hurry. So give yourself a window. For most people, a week is plenty. During that week, the money is not lost, and it is not in danger simply by sitting still in your own insured account. It is just waiting, quietly, while you get organized. Remember this, nothing good is lost by slowing down. A great deal can be lost by speeding up. While you wait, step 2 is to park the money somewhere safe and insured. Here is something a lot of people never learned. In the United States, deposit insurance generally covers up to $250,000 per depositor, per insured bank, per ownership category. That is FDIC coverage at a bank and NCUA coverage at a credit union. For most everyday balances, that is far more than enough. But a home sale or an inheritance can easily land above that line. If yours does, here is the calm fix. Spreading the money across more than one insured bank or across different ownership categories so that all of it stays covered is a completely normal and legitimate thing to do. And I want to be very clear here, because this is exactly where people get confused. Spreading money to stay within insurance limits is not the same thing as structuring. Structuring means breaking up cash to dodge a reporting rule, and that is the one thing you should never do. Staying insured is the opposite of hiding. It is careful, it is fully documented, and there is nothing secret about it. Picture someone who sold a home and walked away with $420,000. Left in a single account, about $170,000 of that sits beyond the insured limit. Moved into a second insured bank or held in a different ownership category, all of it is covered again. Same money, same owner. Nothing hidden. Just protected. If your amount is above the limit, ask your bank or a professional about the cleanest way to keep every dollar protected. Step 3 is to prove where the money came from, while the paperwork is still in your hands. This is the step Robert skipped, and it is the one that came back to haunt him. The fix is to build a small source packet, on paper or on your computer, before the money moves again. And it looks a little different depending on what happened. If you sold a home, your packet has 4 things: the closing or settlement statement, the proceeds check, or the wire confirmation, a copy of any 1099-S form you received, and the deposit receipt. Then add one sentence in your own words. Proceeds from the sale of my home on this date. If you received an inheritance, your packet has the letter from the executor or the attorney or the court document, the distribution check or the transfer confirmation, the deposit receipt. And again, one sentence. Distribution from the estate of this person. And if a document is already missing, do not panic, because most of these can be replaced. Your title or escrow company can usually send another copy of the closing statement. The county recorder has the deed. The executor or the estate's attorney can write a short letter confirming the distribution. It is far easier to ask for these now, while everyone is still in touch and the sale is fresh, than to go hunting for them a year from now when the trail has gone cold. Because here is what happens otherwise. 6 months later, that big number is just a number on a statement, and the story behind it has quietly faded. You know it was clean. You just cannot prove it without digging. That little packet keeps the story attached to the money. It turns, "Where did this come from?" asked months later, into an answer you can hand over in about 10 seconds. Step 4 is to plan where the money is actually going. The destination, the method, and the timing. Destination first. Be honest about what this money is really for. Is it moving to a safer account in your own name? Paying off a mortgage or a card? Helping a family member? Going into an investment account? You do not have to decide everything today, but you should know the next move before you make it. And be gentle with yourself on the big decisions. Paying down a high-interest debt is often a calm, clear win, but locking the entire amount into something you cannot easily undo in the very first week rarely is. If you are helping a family member, decide together whether it is a gift or a loan, and write that down in one line. Because money between family is the easiest thing in the world to remember differently later, and the investment decisions, the ones a salesperson is most eager to rush, are exactly the ones that can wait until you have talked to someone who answers to you, not to a commission. Then the method. Moving money between your own accounts is simple and low risk. Sending it to someone else, a person, a contractor, a title company, deserves more care, and we will get to exactly why in a moment. A few practical notes here. A large transfer between your own accounts can sometimes take a day or two to settle, and that is normal. It is not a problem, it is just a bank being careful. A wire moves quickly, but is very hard to reverse, so it earns the most caution of all. And a method that creates its own paper trail, a transfer between named accounts or a cashier's check, is almost always easier to explain later than a pile of cash. And finally, the timing. Here is a freeing idea. It does not all have to move at once. Moving a large sum in a few clear, documented steps is calm, and it is easy to explain. Trying to do everything in one rushed afternoon is how the mistakes happen. Picture moving home sale money in 3 calm steps instead of 1. First, leave an emergency cushion right where it is. Then send a documented amount to pay down the mortgage. Then move the rest into a safer account once the paperwork is already in your folder. 3 clear moves, each one easy to explain. Instead of one frantic afternoon, You can barely remember a month later. Where, how, when. Decide those three, and the move almost makes itself. Step 5 is the one I most want you to remember, because the day a large deposit lands is the day you quietly become a target. There are 2 threats that matter most. The first is the safe account scam. A call or a message says your money is at risk, and that to protect it, you need to move it into a new, secure account today. Quietly, without telling anyone, because the matter is confidential. Every part of that is built to make a careful person act fast and act alone. A real bank will never ask you to do that. The second threat is quieter, and it costs families a fortune every year. It is wire fraud around a home sale. Right before closing, a fake email arrives that looks like it is from your agent or the title company with updated wire instructions. The account number has been swapped, and the money goes straight to a criminal. So here is the rule for any wire, and especially around real estate. Before you send $1, verify the instructions by calling a known official number, one that you looked up yourself, not the number printed in the email or the text. Call. Do not click if the instructions changed at the last minute. Treat that as a red flag, not a detail. Let me give you one picture to keep. A woman was just days from closing on the sale of her home. The morning of the wire, an email arrived with corrected account details and a polite apology for the late change. It looked exactly right, but she had one habit that saved her. She called the title company on the number from their original paperwork, not the number in the email, and asked them to read the account number back to her. It did not match. The email was a fraud. One phone call saved the entire proceeds of her home. There is a third pattern worth naming too, because it is the most painful one. It is the slow, friendly kind. A new online friend. A too good opportunity a stranger keeps following up on. Even a relative who suddenly takes a strong interest in your new balance. These do not feel like a scam in the moment. They feel like a relationship, or like help. So the test is not whether the person seems nice. The test is whether you are being asked to move money quickly, quietly, or in a way you would feel embarrassed to explain to someone who loves you. And one more habit can save you. Before you move money under any kind of pressure, tell one person you trust and say it out loud. Scams depend on secrecy and speed. A trusted second opinion breaks both at once. Remember, too, that your own bank is on your side here. If a transfer feels wrong, you can ask them to slow it down, to double-check the destination, or to flag it. A good bank would much rather pause a real transfer for a minute than let a fake one through forever. So, if anything ever feels urgent, secret, or rushed, that is your signal to stop. Urgency is not proof. Urgency is a warning. Step 6 is to preserve one clean record and to get ready for tax time now instead of in a panic later. Large money events have a way of coming back around in April. If you sold a home, you may receive a 1099-S, and there is a capital gains exclusion you might qualify for. It can be up to $250,000 if you are single, or $500,000 if you're married and filing jointly. Whether you qualify and how much of it applies depends entirely on your situation. So this is exactly the moment to talk to a tax professional. If you received an inheritance, here's the reassuring part. In general, an inheritance is not treated as taxable income to the person who receives it. But the details still matter. The cost basis of what you inherited and any income those assets produce later. Once again, a good tax professional earns their fee right here. And there are a few more things a professional can quietly save you from. For a home sale, that exclusion usually depends on conditions, like how long you owned the home and how long you lived in it, and the rules can look different if it was a rental, a second home, or a property you yourself inherited. For an inheritance, what you might owe later can depend on the value of the asset, on the day you received it. Which is exactly why writing that starting value down now is worth 5 minutes of your time. And a handful of states have their own inheritance or estate rules that differ from the federal ones. None of that is something you have to memorize. It is simply a list of good reasons to keep your folder and to let a professional handle the part they were trained for. You do not need to become an expert. You just need to keep everything in one place. The source packet, the confirmations, and one short summary. One folder. Future you, sitting across the desk from an accountant next spring, will be deeply grateful. Let us lock it in. Before you move a large, legitimate sum, run the plan. Pause. It does not need to move today. Park. Keep it safe and insured. Prove. Document where it came from. Plan. Decide where, how, and when. Protect. Verify everything and never move money under pressure. Preserve. Keep one record and get ready for tax time. 6 steps. That is the entire video on one card. So here's where I will leave you. A large legitimate sum is good news. It is a home you sold. It is a person who loved you. It is years of work finally paying off. Slow it down. Park it. Document it. Protect it. And keep one clean record. And it stays good news. Because the safest money is not the money you rush. And it is not the money you hide. It is the money you can explain calmly with a folder in your hand. And if you have already moved some of it, the way Robert did, you are not behind, and you are not in trouble. You can still build a folder. You can still document what you can. While you can still slow the very next move down. This plan works from wherever you are standing right now. You do not have to start over. You just have to start. That is the Money Desk way. Make your money easy to explain. In the next video, we will look at the simple money habits that protect you and the people you love as you get older. I am Daniel Brooks. Take care of your money and take care of each other.